Good afternoon, insurance professionals from all over the world. My name is Ariel Rivera, and I am your host of Fun Insurance Solutions. Today, we have a wonderful episode with my good friend Iain Ward from Guy Carpenter. So, you better sit back, relax, and enjoy because today we're going to dig in a little bit into the reinsurance world. Before we begin, I want to give a huge shout out to our sponsors, Lightspeed Voice and Viva Virtual Assistants. If you need phone solutions for your office, make sure you reach out to Lightspeed Voice and told them you heard about them under the Fun Insurance Solutions podcast. If you need virtual assistants to help your office assist on the back office of your daily task, make sure you reach out to Viva Virtual Assistants. I hope you guys are ready to have some fun because this is going to be a great episode. Good morning, good afternoon, and good evening, ladies and gentlemen. My name is Ariel Rivera, and I am your host of Fun Insurance Solutions. This is my favorite podcast for the insurance industry, for Hispanic, Latinos, people everywhere around the country, the U.S. Virgin Islands, and Puerto Rico. I am so happy to be with you guys today. Today, I have an awesome guest, a guy who I appreciate, respect, and he is straight up from London, and he currently lives in Miami. His name is Iain Ward. He has over 30 years of experience in the insurance and reinsurance industry. He's all the way, as I said earlier, he came all the way from London to Miami. He was originally a commercial property and contingency underwriter. And then for the last 20 years plus, he has been a reinsurance broker where he places, business producer, account executive. He manages clients and, accessing the US, Lloyd's, and international market. He works specifically, and that's his specialty, with the Caribbean property and casualty, treaty reinsurance, and the contingency specialty risk. Now, just so you guys know, Iain and we met a couple of years ago, through a good friend, Rafi Diaz. So I don't know if that's a blessing or a curse. I'm just kidding. We love him to death. And, as soon as we met, I knew we were going to hit it off and we were going to have a good time for two main reasons. Number one, we both love golf. I know he's a super passionate golfer as well, and he's all about the Ryder Cup, of course, so am I. And we both love the insurance industry. And when you mix those two together, there's no way you can go wrong. So without further introduction, Iain, welcome to the program, my friend.
Thank you very much. It's great to see you and great to be here. Wow, what an introduction.
Oh, man, I can keep going. There's plenty more I can say about you, but
really. No, it was cool. I liked it. Made me sound really good.
But I'm going to leave that to you, man. So how you been? How's the reinsurance world treating you?
Yeah, it's good. I mean, we're getting into a really busy period with January 1st coming up. That's when a lot of the Caribbean companies have their treaty renewals. So we go through their contracts. So typically October, November, December are my busiest 3 months.
Nice. So I can imagine you have a busy Christmas. Yeah, and then
we try to get it done just before Christmas so that I can just relax a little bit. But, it's good.
Perfect. All right. So before we jump in and we dive very deep into the reinsurance market and your role in Guy Carpenter, I want to ask you a quick question. So it's Friday, right before Christmas, right? You just had an amazing week. You closed every treaty you had to close for every insurance company that you work with, who are your clients. You want to sit back, relax with your wife and two beautiful children and enjoy a nice drink or something. What will be your drink of choice? It could be beer, wine, water, coffee, tea. I have heard everything.
Okay, my drink of choice, and this is pretty much every time I have one, is Tito's on the rocks.
Oh,
I'm a big vodka fan.
So, nice. And you get Tito's. That's awesome. I like that. I got to learn how to drink vodka a little bit more because I do rum and Coke, and I'm not sure it's doing too good to me.
Well, see, that's the thing. I do like rum. I like Zacapa from Guatemala.
Okay,
nice. It's a really good rum. But I found that as I was getting older, it's a lot harder to shed the pounds. There's a lot of sugar in that rum. So
I know. That's where I am right now.
A little bit kinder.
Yep, that's where I am right now. It's just, I still love it. So, all right, man. In Spanish, we say, let's open el baúl de los recuerdos, which is we're going to go down memory lane. And I want you, to give us an overview of how you got into the insurance and reinsurance industry. You can go as far back as you want. I just want everybody who's going to listen, to the thousands of people that are going to listen to this podcast to know who Iain Ward is and how you got into the insurance industry.
Wow, I think if we go all the way back, it's probably a little bit by mistake. And I think that's a lot of people get into the industry not
Probably
really
90%. So sorry to cut you off. Sorry.
exactly, yeah. A big number. So I'd actually done some work experience with an insurance broker when I was 14, 15. My father was a marine insurance broker in Lloyd's. So I had some kind of knowledge of the industry. And it wasn't really my primary choice of career. I was planning to go to college and study to be an architect and do all kind of design things. But at 18, I discovered money and beer and took some time out. So after a while, my father said to me, you know what, you need to get a job. So I went for a bunch of interviews, and one of them came up was a trainee commercial underwriter. And I took it and never looked back, and I've been in the industry ever since. So
wow. And that was with a regular carrier, not for a reinsurance market.
Yeah, it was a UK composite P&C insurance company. And so I was working with their London branch, dealing with commercial property in London.
Nice. And then from there, how did you jump to the reinsurance market? And specifically, you ended up in Guy Carpenter, where you are right now the senior vice president. So, people need to understand you're probably one of the biggest guys for Guy Carpenter.
We've got a lot of people. I think that we've got tens of thousands of employees around the world. So there's a big number of SVPs. I'm not the only one. Let's just caveat that. But no, I mean, as I say, I've been working with underwriting for a few years. I kind of developed into some niche areas. I was writing contingency business, the event cancellation, concert non-appearance, and specifically sporting risks. So I really that's my big passion. If there's any sport on TV, I will watch it. It doesn't matter what it is.
So will I.
Yeah, so to sort of combine that with work and be able to do some sport risk, that was really fun times. And I'd gone through a period where I was underwriting that. I'd gone through an MGA, and I was approached by a Lloyd's broker that were looking to set up a sports team. And he took me in and said, do you want to come over and start working with us? And it seemed like a good opportunity at the time. So I joined that company, and this was back in 2000, 2001. And we did a couple of deals for one of their Caribbean clients. And the head of the Caribbean treaty team at the time said, look, we really like you. You have a really good relationship with our major client. We have an opening for a treaty broker. Would you like to sort of give up the sports stuff and come over and join us? And at that time, the market was really interesting. We just had 9/11. So there was a lot of changes going on in the reinsurance market with capacity. And it seemed like a good opportunity to do that. So I took the job, and I've been doing it ever since.
Nice. So it's interesting how sports brought you to this. So when COVID happened, I probably assume you got depressed like many of us, because, we would watch probably, an ant race or something like that just to watch sport.
It drove me nuts. Not being able to see anything. My wife complains all the time at the weekends because we have a number of TVs on and around the house. There'll be something like college football, Premier League soccer, golf. It'll be on all different TVs around the house. And to go from that to nothing was just bizarre.
Oh, yeah, it was crazy. Yeah. Oh, by the way, I never asked you, are you Liverpool, Manchester United? What are you?
I'm from London, so I'm West Ham.
Well, okay, there you go. One of my neighbors, I think he's a really good friend of mine. He's from London as well, and I believe that's his team as well. But I will ask him tomorrow. So
they're doing good at the moment. So
you guys are rolling.
He's not going to be shy about it if he is.
That's awesome.
So it was tough, and I really do think living in Miami was a blessing in disguise in some respects, because we seem to open up a lot quicker than the most areas around the world. Definitely. So we were back playing golf probably May or June. So there was only a kind of a 2-month break. And that was great because you could be outside, you could actually sort of see your friends and actually do something. Mm-hmm. So to have that was a bit of a lifesaver.
Oh, yeah. And then in our case, insurance being part of the essential businesses that needed to open, and in your case, even more essential because you need to negotiate reinsurance treaties for billions and billions of dollars. For insurance company, they can keep their operations, steady and running and up and working. And not even if you want to jump to specific risks and then do some, facultative insurance and things like that, which it gets crazy. So, in that sense, we were blessed that we were able to be out and serve clients and help people. So that's good.
Yeah, we didn't have a break at all. Fortunately, in the current world of tech, we could set up our laptops at home and just carry on. And there were a few teething problems with some staff to start off with, and people getting used to Zoom. I think those first few weeks we seemed to have constant Zoom calls just to work out how to use Zoom. Which looking back now, it was funny, but. We didn't stop. We just carried on, and we had to service our clients. At the end of the day, we're not seen as essential workers, but everybody needs insurance. You can't live your life without it. So for us, we just had to carry on.
And at that time, that was just the beginning of the hurricane season.
Yeah,
so which
exactly.
made it even trickier. And then when you explain and you go into the details with people about. Of course, the life and health of people are more important than anything else. But then we have certain areas across the country that are going to be starting to be affected or might be affected by hurricane. So that kind of changes perspective a little bit. So
true. And you had that spell of panic buying as well, because people didn't know how long they were going to be at home, and that kind of coincided with. Typically when you need to stock up at the start of hurricane season to make sure you have your hurricane supplies as well. So it just kind of escalated the problem.
Yep. So let's go down a little bit basic. Let's go start with the basics. So, some of the people that listen to us, they don't understand the reinsurance world. They don't understand how it works. But most importantly, sometimes they don't understand, and not because, they can't understand. It's just nobody explained it to them. The importance of understanding a reinsurance treaty, right? Where a treaty will help a carrier build their underwriting guidelines, what jumps into the treaty, what falls off the treaty. When I teach insurance, especially for personal auto, the first example I always come up with, almost every carrier will say, listen, if the vehicle is worth more than $100,000, then you cannot write it on our system because it has to go through reinsurance because our treaty will only allow us up to $999. So, take us to the basic of reinsurance. What should our listeners learn about understanding, and what should also they learn to ask the carriers?
I think they should be asking their carriers first and foremost. I use that question last, is who are they reinsuring with? Because the whole purpose of reinsurance is to basically give the company capital protection. They don't want to fail if they have a loss. So if they're basically transferring that exposure to the reinsurance market, the original buyer needs to know, well, who are you giving my risk to? Because I need to know whether or not they're a safe company to deal with as well. And a lot of that's where we come in, because we actually vet who we market with, and we have a security committee, but we are only allowed to deal with certain companies. But the principles, I think, of insurance and reinsurance are exactly the same. It's the law of large numbers. One person cannot cope with a large loss. So you as a homeowner, if you don't buy insurance and you have a hurricane and your home's worth $500,000, you haven't got $500,000 to rebuild your house, but the insurance company does. Then the insurance company is insuring hundreds, if not thousands, of homes worth $500,000. If a hurricane goes through and all of them are affected, the insurance company hasn't got the money to pay for all of those claims either. So that's when it goes to the reinsurance market. And you're talking about companies that have billions of dollars in capital that are providing protection under these reinsurance contracts. So you're getting access to bigger and better companies. I'll rephrase that. I wouldn't say better companies in terms of the underwriting and the quality of the local companies, but better in terms of being able to spread risk and being able to cope with large events.
Yeah, whenever I talk about you guys, Guy Carpenter specifically, as being one of the biggest brokers, reinsurance brokers, and sometimes agents will ask me, well, what do they do? And I'm like, so how you have an insurance agency and you represent multiple clients with multiple carriers. So that's the same thing they do. They just represent multiple reinsurance companies And that's what they present to their clients, which are the insurance companies. And then we need to understand, and this is where, things get a little bit tricky with Puerto Rico, Florida, the Caribbean with the hurricanes. Where the alleyway where the hurricane comes. When you go to the Alabama, Mississippi, Louisiana, the Panhandle in Florida, it used to be, when we talk about reinsurance, it used to be like, so this is a 1 in 100 years event, or this is a 1 in 500, or 1 in 70, 1 in 90, whatever. What has come down now? Because it seems like every year we're getting somewhere around the country or in the Caribbean, or even if you go to the Pacific and Mexico as well, we're getting destroyed with hurricanes. So has it changed the model a little bit?
A little bit. And, when we talk about those, say the 1 in 200 year event, it is, we're using that as a reference point for the specific location that has been impacted by the storm. So a 1 in 200 storm for Puerto Rico, for instance, is going to be a 1 in 1,000 or whatever for somewhere else, because it's not actually impacting that particular location. And we typically, as the number of years goes up, we're talking more about severity and the bigger amount of damage. So a slightly offshore tropical storm that doesn't really cause much damage is going to be like a 1 in 2 or 1 in 5 or 1 in 10. And as you go up through Cat 1, Cat 2, Cat 3, and you get closer to the island, that's when the return period goes up a lot. So, Maria was obviously a devastating event for the country. I was actually in San Juan a couple of weeks later, and to see it,
and you can imagine you seeing it from the plane landing down. You see everything brown. It looked like somebody put out fire, put the whole island on fire. It was just devastating. So
it was crazy, and just upsetting really, because what we do is we give a promise to repay if you have a loss, and to see so many people suffering and knowing that not everybody had insurance and there's nothing you can do about it.
I know.
That's the terrible aspect of what we do. So we obviously try to pay quickly within the terms and conditions of the contracts to make sure that people can get their lives back going again.
And that's what insurance is for. We tell people and our clients, listen, we are here to help you protect your assets. Like you said, you work very hard, you buy a home, you want to insure it just because you need the protection because something can happen. So it could be, of course, it has to be a covered loss, but a fire can happen in any second. God protects us all, but it doesn't matter where you live. So a hurricane, and sometimes even we move away from that and we talk about flood. Flood is a huge risk. And in Puerto Rico, we had, with the Hurricane Maria, Irma and Maria, the amounts of flooding, it was just a lot. And, something people think, well, FEMA is going to help us. FEMA can only help you to a certain point where you can, on the other hand, buy a flood policy, and the flood policy will cover you, if once the adjuster makes the assessment and he provides coverage, now you're going to be protected. So one thing is the wind damage. The other thing is the water damage. And, a lot of technicalities came into place, whether there was a breaking point, an entering point of the water, because, and it became very hectic and it became very tough, especially for us to explain clients, because as much as you explain to a client that you've been working with providing insurance services for the last 10 years, most of the time it's not until the loss actually occurs that they're like, I remember we talked about this, but okay, explain to me again how it works. So, it's one of those things that it happened. But from the reinsurance standpoint, whenever a catastrophe like this happens, of course, the insurance premiums get affected because now you guys are paying millions or billions of dollars in that case. So how has it changed? Has it, how do you see the market going up, down, stabilizing in the next year?
I think what we've seen probably over the last 5 years, from 2016 onwards, is a slight increase generally across our region. Obviously, Puerto Rico has a significant increase immediately after Maria, just because of the size of that loss. But I can't see it going down in the near future. There's a lot of talk of whether or not we're in a hard or soft market. I would say we're in a hardening market. I wouldn't say we're at a hard market just yet.
Yeah.
And the reason I say that is there's still capacity available in the reinsurance market to get the program's done. I go back to 2001 after World Trade Center, the reinsurance market contracted considerably, and it was difficult to get programs placed, regardless of where they were in the world.
Yeah.
And then again in 2004, 2005, after we had some Caribbean losses, and then Katrina, Rita, and Wilma through Florida and the Panhandle and into New Orleans. Big losses again that caused a lot of reinsurance failure. So there was, again, a contraction. So at that point in time, when you're actually begging people on the 31st of December to please help you to get a deal done, that's a hard market.
Oh, man, I can't even imagine being your shoes.
If you're just arguing over price, that's a hardening market. And that's kind of why I quantify the difference. We're in that phase. There's a lot of reports that come out. We issue one, all the other big brokers issue reports about the state of the reinsurance market and the state of capacity. It's been steadily trickling up, but it's been steadily trickling up in different areas. So I would say the US takes a big chunk of the reinsurance market.
Yep.
For our region, obviously, it's a smaller allocation of capacity because we have smaller territory, less property value, less population. When I say our region, I'm talking everywhere from Bahamas all the way down to Barbados and every island in between.
Okay.
So we have more specialist reinsurers that work within our region. We have just about enough of what we need in terms of reinsurer capacity. I wouldn't say that there's a surplus at all, but at the same time, there isn't. We're not struggling. So we're at that kind of very cautious point where we know prices have to go up a little bit because, as you said earlier, we seem to be getting more and more storms on a regular basis. And as they come along, they seem to be a little bit more intense than the last time. And we were lucky this year through wind season. I know we've still got a few weeks to go, so touch wood, nothing else happens between.
Yes, hopefully not. Please no.
But, it seemed there was a lot of big storms out there, but they seemed to stay out in the Atlantic and not go through the islands. So we needed a year of stability, which has been great. Having said that, I can't see prices going down just yet.
Okay. So when you talk to the Lloyd's markets and the big reinsurance companies, how do they see us in terms of, growth and recovering and getting back and claim handling and things like that?
I would say they view the region very well. The level of data that we provide has got better and better and better. And that enables them to analyze it a lot more closely. And we know that typically after a storm has come through, the local governments will impose stricter building codes.
Yep.
And not only with the building codes, people generally tend to rebuild to a better standard than they
Of course, yep.
They don't want to go through it again. So they know that the risks are improving all of the time. And as new buildings are going up, they're sort of adopting Florida building codes as well to withstand stronger storms. So everything is kind of going through a renovation in terms of the quality of risk.
You build back, and you're supposed to build back better and stronger, and of course, as sad as it is, a catastrophe and horrible, and God bless every family that's ever been through one. But like you said, there's new building codes that are developed and things. And sometimes, when these bad things happen, you always get the chance to build up again in a better way, which in my case, the way I see it is I take a lot of pride. And again, I always say, we're not perfect. We try to be as perfect as we can. We try to solve 99% of our clients' problem, probably 100%, but we can't always make it. There's some things we can do, some things we cannot do. But the insurance industry itself, the way it has the professionalism, the way it has developed, and the way we can keep pushing to be better, it's all tied up because it starts from the top, in this case, from you guys, which is the reinsurance markets. And that's why I wanted to ask you the question, because if the reinsurance carriers are seeing us in a good way with positive eyes, it means we're doing things right. So as a producer and an agency owner, I take a lot of pride in that.
I think you hit the nail on the head there. And What we try to do, and particularly us as brokers, is to really ensure that there's a transparent relationship between the company and the reinsurer. And it goes sort of deeper than that, in that we really want them to be long-term partners, long-term business partners. Mm-hmm. So they're never shocked if a loss happens. They know exactly what to expect. And that goes both ways in terms of the actual claim itself and then the payment of the loss.
Yeah.
And, we have, for the most part, you look at pretty much all of our clients, reinsurers have been with them for 30 years, nice. Through thick and thin. And it's all about sort of gaining that trust so that the companies know exactly what to expect from their reinsurers, and the reinsurers know exactly what type of business they're writing, what type of risks they're taking on, and what to expect in the event of a loss. So it's important.
That's awesome. So I'm going to throw you a big one. You're on the 18th hole. You're winning the match. You're driving out. You've been driving perfectly the ball. You slice it into the woods. How does the reinsurance market adjust or adapt now to all this new evolving risk like cyber risk? Because it's so difficult what's going on with cyber, it just keeps escalating and escalating and escalating, and people don't realize, even if you own a gas station, if you own a small cafeteria, somebody can steal the data, and that's your client, personal identifiable number. And I want to put you in the spot and get where it's just, how is the reinsurance market, readjusting to that so we can provide programs or things like that for our local carriers so we can write business and protect our clients? So now you got to take a penalty shot. Remember the new rule.
Yeah, thanks for that. It's a tough one. Whenever you get something that is thrown at you as a brand new exposure that you never thought you had, and obviously, as you mentioned, cyber is one. COVID-19 was another.
True. Yeah,
in terms of the business interruption, and there's been a few over the years. The kind of the knee-jerk reaction is to basically exclude it, so that there is no coverage for it, and that's not just from the reinsurance treaties. That's all the way through. Because in order to underwrite a risk and in order to price a risk, you have to understand what it is and what impact it would have, and ultimately what financial loss impact it would have on your business or home or whatever. So you have to go through that education process to understand exactly what you're taking on. So you get sort of niche markets that now come up to offer those types of products. And we're seeing that there's a lot of cyber specific MGAs that are coming up and providing capacity. And we look to place that on a separate basis away from the main treaties, so that we're actually dealing with specialists rather than dealing with a property underwriter who is trying to accommodate something that they don't necessarily understand.
That's
but you are seeing a lot of specialist programs that are coming up now, and it's not just an insurance risk; it's a reinsurance risk, because we deal with, as I said earlier, huge portfolios of tens of thousands, if not hundreds of thousands, of properties and cars, all over, not just in our region, but all over the world. And there is that exposure within the portfolio. So you have to do it.
Yeah, and that's the interesting part about that. And I made a joke once about this, and I said we should get one of those hackers, because the problem with cyber, for example, it's this type of risk you don't understand. We don't have the data yet. And you guys, from the reinsurance standpoint, you don't have enough data to understand how to, like you just said, price it or quantify it or something like that. So anyways, I made a joke once and I said, we should get one of these hackers, reach out to them and say, explain us, what are the possibilities? How talented are you guys, and what can happen? Explain me worst case scenario, which is what you guys do.
But there's also that fear factor, because you're also dealing with public perception of what could happen if their data was stolen. It could be nothing. There could actually be no financial loss. And that's the other difficult one to quantify, because insurance is indemnifying for a loss. Well, if nothing happens with that stolen data, then realistically, have you actually, there is mental anguish, because obviously you're worried about whether or not your credit card's going to be used for something. I don't know, but it's a very tricky area.
It's interesting. It's interesting. But yeah, thank you for. So basically, I'm just going to say that your recovery shot, you made it on the green. So good job, man.
Okay, cool.
I was not
that.
expecting less. But yeah, so let's talk about for producers, right? And, and the retail agencies, in your regions, Puerto Rico, USVI, and even across the country, because we got people from every state listening. What's that question you want to ask either your underwriter or so there's difficult risk? I remember before the hurricane, I used to sit down and I love reinsurance and I probably know a quarter of what all you guys know and you and Rafi especially, and even the, chief underwriting officers at carriers and things like that. But I would love to negotiate for some condos like buyback agreements and things like that. And it's fun, man. It was actually going into the numbers and then going into the meetings with the homeowners association and explaining we were able to get this buyback agreement for you guys. We're able to do this. We're going to write it this way. We're going to place the first layer of risk here. The second one is going to come here. And of course, it took me years to understand that. So it's not easy. But what would you recommend? What would be your best tip for producers when they're negotiating accounts on how to talk to their underwriters? In a good way, of course, nothing like you're not going to ask for cyber risk, for example, to be included on the policy. But, just the basics, like, is there a way to better it could be sometimes it's a price issue. They want to better the premium. You win on price, you lose on price. So I'm not a fan of negotiating price, but there's a rate that you can work around and to help, the insurance company and your client at the same time. So what would be that question you would tell them always ask or recommendation? Let's just put it that way.
I'm always looking in all of the deals that we do and all of the contracts that we write and every single client we deal with, we're always looking to create solutions and resolve problems. So I kind of look at this question in that type of way, where I think people get too fixated on the premium.
Thank you. Oh my God, thank you so much.
And too fixated on how much they're being charged. I find there's a lot more to the underwriting and than just the price. And looking at the terms and conditions, whether you can put in a higher deductible or change the way the deductible works, and say, well, look, we're happy with the fact that our wind exposure is not necessarily what we think. So, and just trying to go for maybe a higher than standard deductible, but just be open with the underwriter and say, look, we visited the risk. This is our perception of the risk. This is what we like about it. This is what we don't like about it. More often than not, the original insured has a budget. So I get the fixation on price, but then try and come up with a set of terms and conditions that works around that premium, rather than saying, I need you to
lower the premium.
Yeah, you're all risks for a cheaper price than you're willing to give me. I find that doesn't really work.
That's perfect. I love it, brother. Thank you so much. And the reason I wanted to ask the question is because to me, that's so important. As I said earlier, you win on price, you lose on price. It's if you keep fixating yourself in premium, and not coverage, which is most of the time, and I believe that was the way, I built up my agencies and my career. It was understanding coverage more than anything else. Is premium important? Of course it is important, but it's not the only thing. And the underwriters, when you work with them, the carriers, like you said, they have a range they can work with up to certain limits, because that's when understanding you and your reinsurance treaty comes into play, because there's so much they can do.
Exactly. And it's not just that, it's also trying to educate the client as well, so that they understand why you're having these conversations with the different carriers. I say this all the time: the cheapest deal is not the best deal, and it's so true in every single class of business. Because and again, going back to this whole thing, we're selling a promise. We're selling a promise to pay if something goes wrong. If you go with the cheapest price, which comes from an unrated small carrier that might not have any reinsurance, chances are, if you have a loss, they're not going to pay you. And if they do, it's going to take a year to get the money out of it. Whereas if you go with a more bespoke solution, with a recognized carrier, someone that understands your risk, someone that writes a lot of your type of business, the chances are when you put that claim in, they'll pay you immediately. And I think that's kind of the important thing to get across to people. Is that you need to ensure that you're working with the right people.
That's awesome. Well, Ian, man, I want to be very respectful of your time. This was a lot of fun, a lot of knowledge. I'm sure a lot of people are going to write me about this. And you know what? Next year we got to come back because I want to get back to, the treaties itself, how the forecast, how it's working. What's the outcome? How are we doing? How's Puerto Rico specifically going to be viewing? So I am super thankful for your time. I always ask, if people want to connect with you, if it's okay for them to reach you via LinkedIn, feel free to connect us all the time. People say, so how do I connect with that person? I would love to connect with them for whatever reasons, they identify with you and you bring a lot of value.
I appreciate your time as well. And thank you for having me on. It's been great. I really enjoyed it. And, I apologize. We kind of talked around a lot of stuff and didn't really get into the
that's what makes it fun.
Treaties,
that's what makes it fun, man. No, the technical stuff of treaties is always for a second time because it's more understanding and things like that. What I really wanted people to know is who Ian is, and everything you do. Because at the end of the day, I got to say thank you because you actually help protect our consumers. And for people in the regions you serve, specifically also Puerto Rico. You guys do an amazing job. And I know you guys pour your heart in the treaties you write and you love writing business for Puerto Rico. So you might be from London, but you're always half Puerto Rican now.
For sure, I'm half Puerto Rican. Yeah, definitely. No, if you get good feedback, I'd love to come back.
Yes, of course. You're more than invited. This is your house too. So, all right, brother. If I don't talk to you, I wish you a wonderful, happy Thanksgiving with your family. Enjoy your time. Hope you can get some golf out there as well and have a good rest of your week.
Yeah, you too. I look forward to seeing you on the golf course again soon.
Yes. Take care, brother. Bye.
Okay. Cheers.